In this episode of Let's Talk, we're gonna sit down and talk with one of the top crypto traders in the world. This also happens to be a close friend of mine who resides in London as well. So without further ado, let's step on to his yacht. Fuck, roll the opener. Right, welcome to the second episode of Let's Talk. This time I have the great pleasure to have Sami Loyal with me. Sami is one of the top crypto traders in the country. And I'm not in the world even. Sorry, I sold you short from the very beginning. Why don't you make a quick introduction about yourself?
Yeah. So, one of the things I love to do is inflate my ego higher because trading knocks it down very quickly. And I make crypto videos and I trade the indices markets as well. And I've been a friend of Robert's, my privilege, for a very long time. I think it's like 2-3 years. So that's a long time for me.
And Sami also runs a very successful YouTube channel on Bitcoin trading primarily. You do some altcoins as well, but the main focus is on Bitcoin.
Yeah, so it's Forflies. You can find it with the link in the description, and I'm usually just doing updates on the market, telling you what I think and making sense of it, and then giving you an insight on what I think might happen next. That's kind of what I do on YouTube.
So in today's episode, we're going to talk about how to go from being a complete novice to actually becoming a day trader or a swing trader, whatever epithet of trader you want to or prefix you want to put before it. And the most fascinating thing about you is that you are so young.
19, yeah.
19, and you've already been a key figure on the scene for 2 years already. How did this happen? When did you get started?
So it was the bull run of 2017. Bitcoin was at, I don't know, like $1,800, $1,500, and I was 15 at that time. And I just kind of jumped in. I had always been interested, but I didn't know how to get in. But a friend of mine showed me how I could get in a while back. And it was very simple because I was under 18. There were age restrictions, but I was able to bypass them. And it just kind of took off from there. I stuck to the game, studied books and things like that, and that's why I have such a history in the space, even though I'm so young. It's just that I got a really, really early start.
Do you have any other peers that started off at the same time as yourself, or were you the only one around in your friend group?
No one's ever asked that. No one started around the time I started because I wasn't talking about it. I didn't know that it would be a big part of my life when I started. I wanted it to, but that's like everything I wanted. I wanted everything to be big. It's just most things failed. So no one started alongside me. The people who were in the game at the same time I started, who I didn't happen to know, things like that, a lot of them have ended up leaving because, to be fair, trading is really difficult, and time will usually make 90% of people leave. That's just how it tends to go. But I stuck around. So
I mean, it's interesting because I can draw a lot of parallels to poker in general. I'm an old poker player, poker professional, and started off very early as well, as in studying gaming theory when I was 13. And some of the greatest stars on the international poker scene have been people who started off in their mid or late teens. There is one Swedish guy, Erik Sagström, who quickly became like the top guy in the world, and he was 16, 17 when he was like literally slaughtering the online tables. And then there was the phenomena that I mentioned to you at lunch today, who I think he started as well at around 15, 16, and no one knew who he was in the first couple of years because he was playing incognito kind of, and then it surfaced that he was just this kid who kept whooping the ass of the world-class traders. Do you think there is an advantage in being this young?
Yeah, first of all, there's several disadvantages. I think the big ones are you've got that youthful recklessness, and that's very problematic. Another one is if you manage to beat that youthful recklessness, then you've also lost your youth. So
this is a catch-22.
yeah.
So how would you define that youthful recklessness?
I mean, it's just things like my friends would call me the old guy because I'm the one who would say no, I don't want to do X, Y, Z, and X, Y, Z could be anything that's stupid that a young guy would do.
For example,
I mean, I can't think of a valid example, but A crazy example would be I don't want to get completely drunk and then swim in the ocean because I don't know, I'm not a good swimmer anyway in the open ocean or rather in
or
the
a
sea.
good drinker.
Right, yeah. So I mean that I can't think of a real life example, but that's a good analogy kind of example there. But then advantages, absolutely. I think the biggest one is as you grow older, more and more things start looking impossible, and I didn't have that when I entered. I mean, if me as a 19-year-old or anyone else, 25, 30, whatever, told a 15-year-old that crypto trading isn't the way to go to make your millions or whatever, then yeah, I mean, they'd probably have a good point, but they'd also discourage a 15-year-old from doing it. But at that point, anything is possible. Anything is still possible. And I think that's one of the reasons you get kids and young people trying a bunch of stuff, and the system tells them to stop because it doesn't, conform to the tight four walls. But those walls are not fully constructed when you're young, so you can jump out.
Could we make the analogy about the bumblebee that technically or rather scientifically is not equipped to fly, yet the bumblebee doesn't know that, so it flies?
I've not heard of that one, but that's exactly what this is. Yeah.
Right. So you just don't know your boundaries.
Yeah, and so you naturally push them. Another one is yeah, I mean, you gotta push them to find out where they are, and I think one of the ways you push them is by not caring what they're, and then a big part of it is you don't have bills to pay. You
do now.
Yeah, now I do. But at the beginning, I mean, your parents are covering costs for you, and your only worry is school and the embarrassment you had in school and stuff like that. So there's not a lot of pressure to perform, and I think that's where creativity can just blossom, and that's very valuable. You're willing to try a lot because the stakes are not very high.
Yeah. I actually talked about that in one of my recent episodes, a few months ago, about trading and risk. I mean, should you go pro? And one of the things that I bring up here, I mean, correct me if you have a different opinion on that, but that's exactly one of my takes, that the younger you are, the cheaper risks comes. As in the cheaper risks come when you are 15, 20. If you take a long shot, the worst thing that you will lose is time, but you will regardless gain experience. I had the same when I decided to begin playing poker professionally, that I had already won some money, and I said that I'm gonna give it 1 year. If I fuck up, I'm still gonna be 19, 20, and I still have all my life, and I can go to the university and whatnot. But it was kind of like a free roll. But had I been 30 or 40 when doing the same, quitting my job to become a trader or to become a poker player or what have you, the risk situation would be completely different.
Yeah, absolutely. I'm glad you brought that up, because that's the approach I took near the end of what would have been the end of my trading career. I decided I'm going to give it one last shot because I can, and this time I told you this story many times. I think this time I'm going to do it by the book, exactly as I should be doing it, not kind of rolling the dice and gambling all the time. And yeah, you have more breathing space to do that as a young person. Doesn't mean it's not possible when you're old. I've seen a lot of amazing success stories of people who are older than me. But
when did they start?
Oh God, anytime. I mean, we've had the kind of traders I've worked with. I've had like 60-year-old people plus. I don't even know their age, but 60 plus.
Starting from scratch in their 60s.
Yeah. I mean, it could be late 50. That's not the point. The point is that they're significantly older. I mean, this is where you would start to think, oh, old dogs can't learn new tricks. But no, it's not the case. And also, I mean, another perspective I would take is that there's benefits to all ages. When you're older, you're wiser and you're less prone to make stupid decisions, hopefully. So you just don't gamble, for example, and that's a big benefit I've seen in working with people who are 40 plus, for example.
I would say this is the thing you have got going for you, because you got one step in both camps. Whenever I hang out with you, I tend to forget. I mean, the first time we met up for a coffee, you were 17. I mean, I was twice your age, and it felt so abstract because I couldn't get my head around that I was actually sitting down and having these profound discussions with a teenager. And I also deliberately tried to test you a bit to speak a bit, as in take things to a high level, and you instantly got the references. And if you didn't, you would ask the rather than ask 10 watered out questions to get to the core, you would ask one specific question to get to the perfect understanding of the situation, and that really amazed me. And I'd say this is one thing that I believe you have got going for you, that you're young and impressionable, and you don't know your limitations necessarily in a good way, but you're also an old soul with a lot of wisdom, so you don't do stupid things as many people might have a tendency to do in that very age.
Yeah, I think a lot of that came down to luck. I learned principles like this through books. I mean, one of the ones you mentioned is choosing the right question to dive straight into the meat of a topic. And I think a big part of that is just not being embarrassed to ask a question. When you're embarrassed to ask questions, that will lead you to asking 10 watered down questions, and you waste everyone's time and you still don't understand it. But actually, that there's less shame in it. You're not really expected to know everything at any point in life.
Yeah, that's true.
So I think a big part of it is also I was a social outcast for so much of my life. Unfortunately, that's not the case anymore. But
unfortunately,
fortunately, yeah.
I wish I were a social outcast again.
No,
so
God,
also
no.
play World of Warcraft all day.
Yeah, well, that was my life. It was playing video games and just thinking deeply about why I had no social life and stuff.
I see. Yeah.
I mean, it was a big advantage in some ways, but I had to claw back to be a teenager again as well, to live a normal life too in some ways.
So, how much of a teenager life do you live today?
Yeah, that's a good one. Do you know Dan Bilzerian?
Yeah.
So he's living how a teenager would want to live if he had a lot of money, and I consider myself to be living a very dialed down version of that. So I mean, that comes with ignoring responsibilities and just doing fun stuff all the time. That's
that hedonistic life then.
Yeah. That's become one of my. I don't know if I can call it a vice anymore, because it's more like a lifestyle at this point, and I need to be very careful with it because it's so addicting. But it's just as simple as that road trip I told you about in Europe. That was very spontaneous. I took a 30-day road trip through Europe, mostly quite spontaneously, just because I could, and that's really fun. But now all of a sudden I'm not focusing on what's happening on the charts, and I missed out on a bunch of opportunities. So there's a price to pay, and
there's always a price to pay.
Yeah.
Whatever you do in life, whether you focus on career, you might neglect family life or friends, and vice versa. And even if you do both, there is something else that will suffer. I mean, your mental health or what have you. I mean,
absolutely,
there's a lot of shit going on these days. Anyway.
Yeah, and then it's my first time feeling that real responsibility where there is that price. So there's a lot to come to terms with, but it's working fine.
So basically you got the two best things from an adult and an adolescent. I mean, I know people who are or know of people who are in their 40s who are kids. I mean, they have the reverse proportions. Do you think this is? I mean, how did you become this mature so early? What? I mean, you don't learn Sartre from playing video games.
Yeah. I think a big element of it is I used to watch a lot of thought development videos on YouTube. So it would be a guy called Woody's Gamertag. His real name is Matthew, and he would be giving life and moral advice to other kids online like myself who were just watching his YouTube videos on Call of Duty. And he would be making gaming videos like here's the best way to kill people or whatever, but his Monday video would be...
Have you tried it?
Yeah, well, not in real life, of course, but I used to make those videos too. I used to emulate that kind of stuff, and then his Monday videos would be life advice. A kid would email him and be like, hey, my friend is depressed, or my girlfriend just cheated on me, what do I do? And as a 16-year-old hearing advice from, at that point I think he was 44, that was a big part of what raised me. And because I was online, I wasn't even with my parents a lot, which was something I really regret. Like I said, there's a cost to pay, but it definitely helped me jump ahead in a lot of ways, because I was learning straight from somebody who had the wisdom of a 40-year-old when I was 12. And
it's a huge advantage.
Yeah. It is. It's both. It's an advantage and a disadvantage. I didn't get raised by my parents so much as a random guy online. Is there any regret to be had there? I don't know. Maybe not, but I don't know.
So tell us more about your way towards. I mean, we're not exaggerating here when we're saying he's one of the best in the world. I mean, your track record is insane. I've seen your trades in that Excel sheet that you showed me, and I mean it's remarkable, nothing but remarkable. How did you? I remember you said that in the beginning you made all the mistakes as most traders, and then you came to a point where you realized I need to either shape up or get the hell out of this trading arena. Can you tell us a bit about that?
Yeah, so it's quite exactly what you said. I used to make a lot of mistakes, and this is where the recklessness became more of an issue. Yes, it enabled me to try stuff, but when I tried them recklessly. So yeah, I mean, one of my biggest problems was, as everyone else has the problem, I traded with too much money. I went all in, or if I didn't go all in, I still did something stupid like 50% in a single trade.
So okay, basically much too much risk on a single trade.
Yeah, right. Yeah. And I mean, that's like we were talking about the analogy of a tree that, you know, it grows from a seed and it becomes a big oak tree. I mean, you know, this is the seed you plant to really mess up your trading habits if you trade with too much money, because that's the seed of so many other problems. Now you're sweating, you're over leveraged, you're worrying about your stop loss. You're God forbid you're waking up at like 3 a.m. to check a trade. That's how you know you have a really, really big problem. You know, so there's all those kind of signs, and they usually stem from trading too much, but trading with too much, and then the problems are trading too much. You know, you want action, you want a high, you want some sort of euphoria hits, or maybe you're just addicted to the feeling of loss because there is still an emotional spike in your brain, and you just want something, you want to feel something. So I had all those problems, and countless more. I don't even want to name them, but I promise you, if you've got it, I had it. And yeah, it came to a point where the Bitcoin market crashed, the whole crypto market crashed. This is kind of Q2, second quarter 2018. And yeah, I thought, right, I mean, I had a good run. I realized I was only lucky during that run because everything was going up. And now I need to either get very serious about school, or I can try this one more time and do it exactly how the books I read were telling me how to do it. So that means trading with a lot less money. I think that was the biggest one. That's the easiest one to solve, and it solves like 99% of other problems.
Do you mean taking on less risk on each trade, as in the 2% rule or 5% rule?
Yeah. So now, for example, I mean, I'm trading something between, I don't know, 2 to 8% of my portfolio goes into each trade,
and then you still have a stop loss. So your effective risk is maybe 0.5% to 2% of your total net worth.
Absolutely, I didn't even consider that, but yeah, that's a big part of it too. So my overall risk is very low with the stop loss accounted for as well. And you know, that immediately means that now you don't have as much of an emotional investment in your trade, and that allows you to detach from it. I think a big part of it is, for example, I was just in a trade which was profitable, and my stop loss was moved to break even. So I didn't need to look at the chart anymore. I just had 2 alerts because I'm also a YouTuber. I need to know what's going on. But if it, and I said this publicly, if it were just me trading this and I didn't have to report to a YouTube audience, I wouldn't even look at this. I mean, I would just I don't know, roll around in the mud or do whatever, you know, literally
like on a normal day.
Yeah, just anything I want, other than look at the charts, and that you can't do that if you're trading with too much money, because you want to know, you know, is my wife going to be pissed at me if something goes wrong or something like that, and you need to know like what's going to go wrong, or is it going to go wrong, or something like that. And yeah, it's a big problem trading with too much money. So I did it by the book, and that's what fixed everything for me.
I have a funny anecdote. A close poker friend of mine, he actually still plays. He got successful quite early, and he was already like 30 when he became successful and had a wife, and was kind of, you know, at the stage in life when you want to actually build something stable and something lasting. And he won a lot of money in a tournament. I'm not gonna disclose who this person is, but he won a lot of money in a tournament, and then he went from playing cash games where the buy-in was about $200 per table to playing the high stakes game where the highest at the time, where it was $5,000 per table. And then he he had a good run where he won about 200 grand in 2 weeks, dollars, and he told his wife about it, and she was over the moon happy because she began to plan for the future, like, oh yeah, we can maybe buy a home soon and all that stuff. And then in just a few days he blew it all, and he didn't have he felt so shaken from it and ashamed that he didn't dare to tell her about it, and she was still on pink clouds.
Yeah.
It's,
do you know what? I think it's so important that you brought that up, because we mentioned this during lunch, that euphoria is very dangerous as a trader. And so what I was saying is I actively don't seek euphoria through my trades anymore. I mean, that sounds so obvious to say out loud. Don't look for excitement in your trading. This is really stupid, but yeah, I mean, you know, you need to internalize it somehow. And if you feel that kind of euphoria where, yeah, I mean, you just made 200k, to be fair, that's really good money. But if you just made 200k and you're feeling over the moon about it, that I can't remember any exceptions to this rule. Maybe there are a couple, but it always directly precedes a big loss.
Yeah.
Any euphoria precedes a big loss. It's what comes before a big loss. I can't think of exceptions to this. I mean, I had a guy who was talking to me. He was up from 60k to 80k USD in the space of 3 months, and he was over the moon about it, and his family thought he was the man, and they were all hailing him as the king, and then he lost it all in like 5 days. And I even told him, hey, look, going all in on stuff is not a good idea here. Like, your head is massively inflated because of your money right now, and now is not the time to keep going all in on stuff. You know, you gambled, you made some money, right? Walk the hell away. You know, now do it safely.
I think this really well sums up 2017, all the crypto craze. I mean, everyone making money on paper and not realizing their profits, and feeling like fucking Einstein of their little village wherever they come from, and then everyone blows up at the same time, being in a 1 year denial and seeing their account blowing up by what was it, 85% at most from the peak Bitcoin. Yeah,
it was something like 85-80%.
And as we talked about at lunch, I think this is coming again. As I've mentioned in some of my previous episodes, that I see every tendency for a parabolic run on, at least on the Swedish market, and that's when small cap stocks will really explode, and unexperienced or inexperienced traders tend to flock to those particularly. I mean, if you only have small cap stocks in your portfolio, it's a statistical giveaway that you're new to the game, and those will be the greatest losers as well, because once things really turn sour in a markdown, that's when many of those companies will cease and desist to begin with.
Yeah, I think a big reason for that is one of the reasons they go up so much, they get so inflated, is, I mean, first of all, it's just a low market cap. It's so easy to move them with volume and with low volume, and so what you have is a bunch of inexperienced people who are subject to panic very easily, buying into this, and they're the only people buying into it, maybe apart from some sharks and whales that you might want to call the shadowy people at the beginning, but they're the only people buying into it, and they're subject to panic very easily. So as soon as that floor gets ripped from underneath, all these people who have tendencies to panic and trade with too much money and are otherwise doing irresponsible things and disrespectful things, I call it disrespectful, to their money, they start panicking, and that triggers a whole domino effect of everyone else starting to panic, and now you have a pump and dump where, you know, you've gone up by 2,000% and you've dumped down by 99%.
An Eiffel Tower.
Right, exactly like an Eiffel Tower, and that's usually what tends to happen with smaller cap stocks, because unfortunately they're you know, a lot of them don't have anything significant to them. It's not the next Bitcoin or the next Apple. You know, there is no next Apple. It's just Apple, for example. That's why it's the biggest one. Yeah. And I think that's hard for a lot of people to come to terms with, because there's an emotional investment, because you're trading with too much damn money, and so you can't see that with sober eyes. That's
a very good point. I have a prime example of that, actually. It's a Swedish company called Starvolt. It's a gaming company. I was one of the private placement investors in the company. I love the company. I think they're doing a great job and all, but it's a true roller coaster run by nothing but fear and greed. The stock price, of course, run by fundamentals in the long run, of course, but now, for example, from the Corona bottom, it went up by some 2,000% in a few months, and the company has made no profits. It's had, I think, like I don't know, 7 or 10 rights issues since its IPO in 2007, and now the company peaked at a company valuation of 25 million pounds because they have a launch this late in the Q4 or late in Q4 where it's all based on hype and hope. They still haven't sold any games, or they're barely breaking even now after a long time. And
how are they making money if they don't sell games?
They sell games, but they don't sell enough to. I mean, they bear. I don't know the exact numbers now, but it's somewhere close to break even. And hence all the rights issues, and still the company was evaluated at 25 million pounds, just because there is a release coming up that they think will be the big break for the company. But they still have to sell. I mean, now they sell. I don't know if it was like 4,000 games monthly. And to justify a company valuation of course 25 million pounds, they need to sell that times 100 or 1,000. I don't know. I mean, it's, and we see that on a lot nowadays, at least on the Swedish market, with these exponential moves in small cap companies. And it's funny also when you go onto forums with where people discuss these specific companies. If you ask, sometimes I've noticed that when I do it myself, or when other people do it, ask critical questions or constructive questions or bring things up, there is this kind of a hooligan-like atmosphere, as if whatever I say will cause the price to dump or something, or as if that were to be my agenda.
Yeah. They don't like it. They get very defensive.
Yeah.
And I mean, those are the people who you see are holding the same bag since the all-time high or something like that, and they just can't seem to let go of it for whatever reason. And yeah, it forms a community, and they're very passionate about it until gradually, one by one, they just fall off because real life has to come back, and they need to put food on the table, and they need to, come back to reality. And then you realize slowly, month by month, there's less people in that community, and that's because they're all moving to it. Repeats all the time. And you mentioned it might repeat with the small caps in the Swedish stock market now. I mean, that's not surprising at all. It's the exact same formula of greed kind of playing out in the exact same way. So none of these are coincidences to me, and I think a whole lot of these problems can be solved by I think a big part of it is not seeing it as your lottery ticket. It's actually the reason I don't like to invest. I think investing is, unless you're doing it because you just have a bunch of liquid cash that you don't want to do anything with, that's completely different. But if investing is your ticket to heaven or making a load of money, then I think that's putting too much faith in things that are out of your control. And that's why trading for me is the big appeal, because you can control that quite well if you do it properly. If
you learn how to control it, that is.
Yeah.
That's the big caveat, because most people don't get to that end.
State. It's just that as an investor, you're not in any control. And the best you can do is pick a good stock or pick a good index to put your money in, and that's it. But as a trader, it's in your hands, and so if you're a bad trader, it's very much in your control if you can fix it or not, and that's what I like the most. It's what you get in is what you put out, but you can't put in more effort as an investor. You just have to park your money somewhere and then cross your fingers and wait.
This is interesting because in Sweden, for example, it's very common that people are position holders, as in they buy with the intention of sticking with that investment for anything from a couple of years to 10 years, what have you. I mean, longer prospects. In what sense would you say that it's a risky proposition to be an investor? You say it's because it's out of your control, but of course these people will come back at you and say that, oh yeah, but the markets all have a historical tendency of always going up and up.
Yeah, and I agree with that. It's just that if that's your main way to make money, then that you're not really grabbing anything by the horns and taking much initiative, the way I see it. Yeah, absolutely. I love the idea of buying an index and sticking with the index for 10 years and just riding up 10% every year. I think that's a really, really good system. It's just that if that's your main thing, you know, these people, if they're doing it and they have regular day jobs and they're getting, I don't know, call it a 5k salary and 1,000 Swedish kronas or whatever goes into the stock every month, then that's different, because that is a passive investment and you're just topping up the piggy bank essentially every month, and it's a piggy bank that grows. That's amazing. That's really, really cool. That's very responsible in my mind. Very responsible. But if you think it's going to make you rich, it's not. It's you know, you have to start looking at small cap things that might blow up into big cap things, or you want to start riding trains like Tesla from whatever $400 to $2,000, but that's not going to make you rich either, because that's only a 5 times gain. So now you need to leverage it, and all of a sudden you're a trader. So this is what happens when you start to take more control of your destiny, so to speak, for lack of a better word. I think it just pushes you in the direction of being a trader.
It's interesting, because I just read the other day, there's this trading author named Michael Covell. He wrote Trend Following, is one of his pieces, in which he says that people would spend 2 hours researching what vacuum cleaner to buy, but when it comes to buying stocks for half a yearly salary, they will do it in a whim, just because someone recommended it to him, or recommended it to them last day over a beer.
That's a very, very good example of people imagining that the stock market is their lottery ticket. It's and that's where I would actually turn around and say it's very disrespectful to your money to do that. It demonstrates to me a lack of respect for money. If you would research for 2 hours of vacuum cleaner, but just because one stock is up and someone happens to say it to you at the pub the same day, you buy it. That's not responsible. That's not okay. And I think the approach that comes from is you're just placing too much hope in something else. The best thing to place your hope in is yourself, because you can control yourself.
Will you ever become an investor yourself, you think?
Yeah, 100%. Yeah. I mean, I've got liquid cash, and I want to park it up somewhere. So I'm glad I haven't moved it yet. It would have been a very bad decision if I did. But I mean, the goal, what I've been learning from other wealthy friends is more and more recently is that the best route to take is to make a big amount of money for yourself, and then live off the interest. You know, by, you know, whether it's loaning it out or collecting rent on that money from property, or dividends from dividend paying stocks, or just riding up an index. I think that's one of the most exciting things to me, because you don't have to work for that money anymore. So 100%, yeah.
I read about the same theory, but a bit more expanded. It relates to fortunes that have been within a family for centuries. And what they almost always have in common is that they have a lot of gold, fine art, and properties.
Yeah.
Hardly any liquid cash available, as in it's not like they have a billion of whatever currency in a bank account just sitting loosely. It's almost always entirely tied up in those things, because Mona Lisa is not going to be cheaper in 10 years, and certainly not in 100 years. And the same for if you have a bloody castle or a flat in Hong Kong or London or wherever. Over time things go up. Of course, unless there is a huge pandemic coming that kills off half of the population, which will make the supply and demand askew. But
so what they're doing is betting on, and this is why capitalism is really shiny, in my opinion. They're betting on humanity just getting richer and more powerful as a collective, and that's the only thing that's going to make Mona Lisa more pricey in the future, is if you and I get wealthier and our children get wealthier, and that's what's going to collectively make everything bigger and better. But yeah, it's one of those, you know, I don't understand why people hate the rich so much in that sense, thinking we can just I'm not part of them, but if that they can, Jeff Bezos, for example, can solve all of America's poverty, because a lot of it's tied up in stock, for example. It's not liquid cash. And if he tried to sell it to fulfill their fantasies, he would crash the market, and his employees would be homeless the next day or something.
Yeah, that's
so
a good point.
It's very irresponsible to put those ideas forward too. It's never that simple. And yeah, tying money up in property makes a lot of sense. Populations aren't gonna slow down necessarily for a long time. So I want to be the one to own property on Mars. That's gonna be fun.
That's interesting. Are they gonna sell it at all? As in, are they gonna sell land? Is it on the map?
I'll just take it myself, I guess. Yeah, just start up a space agency of my own. And yeah. No,
Do you need to go there to claim land? You think?
I mean,
you can already buy. You can already name like a star in the universe. There are companies where they sell certificates, so you can get one for your girlfriend and named after her, or and they just claim ownership of it, and you own kind of. I don't know if you technically own that star. I mean, there are of course billions and billions of them, but
I like that idea. But no, it's like staking a claim on Antarctica, for example. I mean, no one can really defend or prove that they have a claim. I think there's a lot of overlapping countries that want the same piece of Antarctica, and no one's really there to enforce it. So it's kind of the same as, me carving out a place on Mars for myself so I can get away from politics.
Do you need to go that far to? Wouldn't Antarctica suffice to get away from politics?
It's very cold. So is Mars, to be fair.
Yeah,
but
I think it is too.
But no, I like how dramatic it is. It suits me. So.
You'll have to learn how to hold your breath for a long time.
Yeah. No, I'll just go around in my astronaut costume, thinking that Bitcoin will go to the moon, and it'll be very, very homely.
The very one you wear when you trade.
Yeah, right. When I go long 20x or something, I don't know. It sounds fun to me.
Yeah, it does sound fun. I hope I'm awaiting an invite whenever you build your mansion on Mars.
Yeah, I mean, we'll make and this is super off topic, but I think we'll make like a little civilization without all the politically correct stuff, and I mean just normal people really, and normal people who want to live normal lives without all the other annoying stuff getting in between, and virtue signaling, stuff like that. Don't need anything.
Sounds like utopia to me.
Yeah.
So we've come. We've gone far astray from that society that you picture there, or the picture.
The thing I see most of all is people just want to live a normal life with their family, and we just keep on getting pulled further and further away from that by random things that no one cares about. I'm not even going to name them because I don't want the hate coming to you. but yeah, I think it's a waste of time.
Yeah, 100%. So you day trade mainly, or only pretty much, and swing trade of course. But it's the short, the short horizon.
I don't like the term day trading because it's firstly it's not what I do, but it's got a very bad connotation to it.
Does,
no one likes day traders.
Yeah.
I don't
douchebags, all of them.
Most of them, most of them just try to sell you something. No, for me it's a bit more longer term than day trading. I don't open multiple trades in a day ever. I mean that's super rare. It might have happened like once or twice in the past year. I'm mainly opening a trade and then keeping it running for maybe a couple of days. Never more than a week. Very rare that I have a position open for more than a week, but it's usually some matter of days, and I just find that that's a sweet spot where I'm not competing for the profits that the bots, which are smarter than me and can do more calculations than me, are trying to aim for, because a human can't win against bots, and that's why I think it's pointless to trade on low time frames. But then I'm still playing the psychology of traders as a shorter term trader.
How exploited are the markets in terms of bots versus real traders? Speaking on the Bitcoin arena.
Yeah, so I mean, maybe even for all markets, not just Bitcoin, but on the shorter time frames, it's completely dominated by bots. And I honestly think you'd be a fool if you tried to compete with them, unless you have a bot of yourself, of your own. But then you wouldn't be listening to this podcast. That's not what this audience is. I think that it's pointless to be trading small time frames, and really again what that demonstrates is you want action really, really quickly, and there's an unhealthy obsession towards it where you really crave euphoria, and so you're a day trader. You're looking at the 1 minute time frames because you think maybe I can spot something and that no one else has seen, but it's all nonsense. Yeah. But when you do zoom out, yes, there is still, you do have to take into account what bots might do, especially with Bitcoin, because, I mean, we're always just one click away from a really big $1,000, $2,000 candle upwards, and it's going to liquidate everybody, or even downwards, and a lot of the time it's triggered by bots. So,
The BART patterns.
Right.
Yeah.
Right. We don't have many of those anymore.
Yeah.
Which is very good. But
Why not? What happened?
why not? That's a good question. I think it's because there's more active human traders in the game. When there's an absence of active human traders, then what we do, what the bots will do is send the price in one direction, which would liquidate as many traders as possible. And you gotta bear in mind, this is so easy to do with the lack of regulation in the space. I don't know what the people who say that stocks are more manipulated than crypto are thinking. It's ridiculous. I mean, crypto is ridiculous in terms of how much the people at the top are making, the people who run exchanges. Not only can they see exactly who the winning traders are and then replicate their actions, which to me is an insane power. I wish I could have it.
They shadow their trades, basically.
Yeah, they trade alongside the winners and they trade against the losers. Which is a big source of revenue for them. Not just the trading fees, which are massive, but they also, they know exactly where liquidation points are. And guess what happens when you get liquidated? You don't, if your leverage is 10 times, it's a 100% loss is what liquidates you. But you don't get liquidated at a 100% loss. You get liquidated at maybe 95, 97%. Who pockets that 3%? So you imagine all of a sudden you've got a cascading effect of 100 liquidations and each position is worth $10,000. I can't even do this math anymore, but they're pocketing 3% on each of those $10,000 positions just because they got liquidated. So that's very easy to do when there's low volume in the market, and we don't have that anymore with Bitcoin. Maybe because the price is high. Maybe, I mean, I could name a million reasons. The reasons don't matter. I just know that they don't happen anymore.
I mean, there was talk as well. I mean, you're probably the right person to confirm this, whether it's true. That it used to be at least common that Bitcoin whales would kind of pull together or work together to pump or dump the price as well.
Yeah.
What's in it for them? Would they take leverage position at the same time while doing that, or?
Yeah. So actually, this relates to the BART patterns. Do we need to describe what BART patterns are first?
I'll show a graph and you'll understand.
Okay. So what would happen is an exchange would, let's take BitMEX because they're maybe the most shady one in the whole space. I love you, BitMEX. Don't ban me, but I still trade on
Bitmex. Genius out of the impulse.
Yeah. Well, I mean, everyone knows it. Everyone talks about it, and BitMEX doesn't really deny it. I think it's cool that they're adding KYC, but what they do is they would trigger, and it could be anything, not just BitMEX. In fact, I'm willing to bet that every exchange does this. Even especially when they say they don't, they will start a rally of the price going higher on their exchange, and this is very easy to do on leverage exchanges because you don't need that money to do it. You don't need the money to push through the order book, you just leverage it. Or what they'll also do is start it on spot exchanges, but there is no leverage. But in any case, what will happen is the price starts moving in the upward direction, and those whales, for example, will already have long leverage positions from earlier on, and they've triggered a move on the spot exchange, for example, which makes the leverage exchange move even more extreme, and they were already in from the bottom.
I see.
So that's what happens when whales kind of pull together and do those pump and dump patterns. I don't think they happen anymore, and maybe a big reason for that, I hope a big reason for that is just regulations and genuine fear of institutions like the IRS.
Yeah, I mean, it sounds like something that could end you up in jail had you done it on any other exchange.
Yeah, 100%. I mean, it's super illegal. It's just that, I mean, there's no laws governing this in crypto, but I mean, now even BitMEX requires KYC for everybody. So, these regulations are tightening, and the threats of not following them are getting more severe, and that's why I think we're seeing less of it. It's an example of where everyone hates regulations and governments getting involved in stuff, but it's genuinely making it safer for us.
Might be what's needed as well to regain the trust in the crypto arena, because it's almost after the blow up in 2000 or during 2018, it quickly got a bad reputation. The crypto sphere. Do you think this might be something to regain the overall trust?
Yeah, I mean, I feel safer knowing that BitMEX is requiring. I mean, it sucks for the US traders and stuff, but I'm just a trader. I'm just one guy, and I think it's better. So no doubt institutions and the players with big money who, and another thing you got to understand is you can't just put your money as a player with a lot of money. You can't just put money in Bitcoin. I mean, that's all of a sudden your banking partners are going to say, all right, then bye. We're not going to bank with you anymore if you touch Bitcoin. And so we enable more people to enter the space if there's more regulation here. Of course, that defeats the point of Bitcoin, and that's why it's a whole very poetic thing where I don't believe in any crypto. I don't believe in Bitcoin. I think it's already failed. But
oh, really? In what way? That's interesting.
I mean, it's meant to be trustless and without government intervention and stuff. And what's
but it still is if you have a hard wallet.
Sure. It's just that now who controls a lot of the Bitcoin?
Of course, the exchanges and
exchanges, which actually are probably better than governments because they're just greedy. They don't necessarily want power, but
they always want power.
Exchanges as well.
Yeah, any company wants power.
Sure.
I might sound like a conspiracy theorist here, but I think power comes with wealth. It's the next step after wealth.
Yeah, sure. I mean, once you've had enough money, you want the power too. Absolutely. I don't know if all exchanges are there yet. I don't see it happening because if they wanted power, they wouldn't do such obvious manipulation in the market, like triggering bot pads. I mean, this is the most obvious thing. Everyone knows that you're robbing from your customers. Everyone knows that exchanges do this. I think. I don't know. Maybe it's just common knowledge for me. But yeah, Bitcoin is control. I mean, most of it's mined in China, so good luck with that. And so yeah, it's lost a lot of its original appeal, in my opinion. I think a big part of it is it was meant to liberate the people in a financial sense, and now it's just I want to go long or short on Bitcoin because it's going to make me money. That's the only reason I'm here. So
are you saying from a fundamental perspective that Bitcoin might very well be gone in 10 years because its core purpose of being this counter movement to governments and banks and established financial institutions has been defeated?
Yeah. I mean, who's regulating it, right? I mean, for example, if you want to buy, and this is hilarious. It's so obvious. It's like that Orwell statue we saw outside of BBC. It's so hypocritical. You've got, for example, the CME, Chicago Mercantile Exchange, or CBOE, allowing you to buy Bitcoin, but you're not. If you're buying Bitcoin through these institutions, you're not actually buying Bitcoin. You're just buying the rights to a Bitcoin or to however many Bitcoins you bought. So you can't send it because, I don't trust my government anymore, or you can't send it because I don't want anyone to track my finances or anything. It's held by the bloody institution. You have no control over it. And that's fine on its own because that's just another way to get in. That's another way to get the price higher. But that's actually the main way. I mean, Robinhood. How do you buy Bitcoin? You don't. You just buy the rights to it, or
you mean something that shadows the price, basically.
Sure, yeah, derivative.
Derivative.
I mean, it's what you trade on with BitMEX, for example. So, I mean, in a lot of ways, when people say I'm buying Bitcoin, they're just. I mean, it's very much only in the investment sense. No one cares about the peer-to-peer decentralized structure of the network, which is really cool, by the way. I love the whole network idea. I love sending and using Bitcoin. I still send and use Bitcoin, even though I talk so much crap about it. But it, absolutely, I mean, it's not what it was originally. You asked me if in 10 years it won't be like that. It's already not like that. It stopped being like that when futures trading became a thing, which was late 2017.
But okay, here's a hypothetical scenario then. What if we were to get the, which I think is very much in the cards to happen, to get the worst financial meltdown the world has ever seen, as in modern time. We're talking since 150 years back. And a lot of banks were to falter, and people would get into a lot of, as in kind of entire generations' wealth being wiped out.
1929.
Yeah, worse than that. There was actually a worse crash in America. I think it was in the 1840s that I mean, dwarfed the 1929 one. It's just that it's so far back in the time that people don't really know about it. But everyone.
Was that tulips?
No, that was in Holland in the 1700s. But no, this one was as in literally the American markets, as in stock markets, tanking completely. But don't you think that might be the time for Bitcoin's core purpose to mature?
Yes, I think that would really help bolster Bitcoin's case. And we already saw that, for example, with Venezuela and Zimbabwe, these countries that have had really bad economic collapses. People are interested in Bitcoin at those times. What we can't do right now is shake the fact that people are only in Bitcoin to make money, not because it's exciting, maybe just a small subset of nerds, which is completely fine, but they're not going to affect the market. And so, yeah, I mean, if it gets really, really bad like that, then I think Bitcoin's going to have a very real use case. But, I mean, if we're talking about something at that scale, it sounds very post-apocalyptic. I think maybe we'd look at bottle caps a little bit more than Bitcoin. And then more importantly than that, I'm not even the right person to... I mean, that talking about why Bitcoin failed its original purpose is already beyond the scope of what I know and do. But this is, now we're talking macroeconomics on a scale of many centuries, and I don't focus on that too much because it doesn't make me money. So
fair enough. No, you're a businessman.
Yeah, and as a trader, what I found is we can speculate on those things all day, but this is actually my problem with long-term trading and investing is you don't know if you're right or wrong until a really long time in the future, when you're several gray hairs down the line, and it's been years, and then what if you're wrong? I mean, you don't know the answer until a really long time. But as a trader who is a little bit more frequent, you can test and refine very quickly. In a matter of weeks, you can develop a good system, a competent system as a trader, because you find out if your ideas were correct or incorrect within days. And that, to me, is kind of where my energy goes.
This brings my thoughts to Ed Seykota from Market Wizards. So Ed Seykota is one of the top traders in the world of all time. I mean, I think he was the one who had a $5,000 original investment and turned it into we're talking like 50 million, as in on stocks, and he said, I'm paraphrasing now, but something like you'd never know when you're in a trend before that trend has ended, or at least very late into that trend.
Yeah, it was very clear that Bitcoin was in a very bullish trend in 2017, which was its final year of the bull run. Yeah. It was the last third.
Yeah, exactly. It was during the fifth wave, the exponential one, that it was very obvious. But before that, people thought it would crash at 10,000 or at 7,000. I remember when I saw it in November in 2017, when it went from like 6,000 to 8,000 in over the course of a day. I thought that, okay, this is it. This is the sickest thing I've seen, because when I looked at the graph, it just went up and up and up, and then on the first retracement, everyone thought, okay, now it's gonna plummet, and then it just kept on going. So
I remember those days very well.
Yeah.
I can never. We were talking about euphoria near the beginning of this podcast, and I'll never shake the memory of. I came back from school one day, and I hated school. I came back from school one day, and I saw the price of Bitcoin. This is mid-December, so this is right when it's at its all-time high. I'm talking like $17,000. And I fell on my bed, and I thought to myself, I'm a fucking genius. And I was just laying on the bed, and I was looking at the ceiling, and I was thinking, yeah, like, this is it. I'm gonna have a yacht. I'm gonna have all the models on my yacht and stuff like that, and this is it. And yeah, that's, you pay for euphoria. I can't stress this lesson enough, because it feels like so many people need to hear it. If you get excited by your trades, it's very likely you're going to be very, very upset afterwards as well. Which is why, kind of. That changes subject, but why it's not good to why alarm bells go off in my head if I start to feel any emotional response to a trade. But yeah, as you said, that kind of mania you get. I really like that quote. I hadn't heard of it with the fifth wave. You only know that you're in a trend near the end of it, but it makes a lot of sense. Absolutely.
It's funny as well, because there is I get why people struggle on the markets, because I don't know about you, but I have to restrain myself a lot, and I've learned to do that from experience, because I burned myself so many times. I think that's the only way to properly learn how to trade, to really pay through your nose, because I used to say that there are two things that really teach you well, and it's physical violence and it's losing money. And trading is certainly going to cost you the latter, and some mental pain as well while learning. But my point is that often when something goes parabolic, whether it's a stock or cryptos or what have you, I feel like usurped by that craze. And in that moment, it feels like it can only go one way, and that's up. It's like it's impossible to emotionally fathom that it might at some point go down ever. So I think that's one of the reasons. I mean, it's kind of like a collective hypnosis, where you buy at the top and it feels so fucking great. And then when things begin to go down, you immediately enter a state of denial, and you wait for that, at least that rebound. And then when it begins to rebound, you go, oh, now we're going to new highs, and so you still don't sell off. I mean, I don't know how many times I've been tricked by the market in that very situation. Do you still feel that yourself when things go bananas?
So as you said, one of the only ways to learn is by making the mistakes so many times, and then you just have enough of it. So no, I don't get that feeling ever. I'm trying to think of an exception. When I fixed my trading up was mid 2018, when I started doing things by the book, and since then I don't think there was a single instance of it, or maybe there was a couple that I'm forgetting, but no. To answer quite directly, it's not a normal thing, and the reason is I'm usually out very, very quickly. So the problem in speech, and this is not a problem, but the problem I might have is I get out of a 30% profit and then it rallies on to 200% profit. The reason that's not a problem is because I'm not interested. I mean, I'd love a 200% profit, don't get me wrong, but I'm more interested in making consistent 30% gains so that I can compound my money. We want to strike the beauty of compound growth no matter what we do. As an investor, we want, the fun only comes in when your money turns from 50k to 500k, and now that same 8% per annum is 40k a year instead of 4k a year. That's the fun in investing or trading. So I'm looking for those compound gains, and because of that, I'm never interested in. It doesn't get that far where there can be some sort of euphoria where I can't possibly fathom it can go in the other direction, because I'm out at 30%.
You mentioned earlier at lunch that trading, I mean, something in terms of that trading has to be a bit boring.
Yes.
Successful trading has to be a bit boring.
Yes. There is one of the reasons for that is if it feels exciting to you, it usually just means that you're not used to it. And statistically speaking, if you're not used to it, you're one of the losers. It's just so likely to be the case. Right, so it shouldn't feel euphoric to kind of be making money in the markets, because it means you're not used to it, and by nature of that, you're going to lose it. But then, the other thing is, I mean, I say this to the traders who are in my VIP group, that it's the first thing I say to them: don't look for highs in trading, because I mean, trading will afford you real life highs. And I made the point with a Porsche in the Californian desert. I get my highs from real life driving cars. And
you got like 4 cars, don't you?
Five, yeah.
Maybe 5. You don't even. You have to count on your fingers.
yeah, quite a few. I mean, and that's. I mean, I would have had less, but I started driving so early, and I couldn't get insured on high performance cars. And
they're not Kias and Fords. They're 2 Teslas and 1 Porsche. And
3 Audis and a Tesla and a Porsche. Yeah. So
and you have had 3 Teslas so far, haven't you?
2 Teslas.
2 Teslas.
I wish 3. Yeah. The third one will be the Roadster. But that's exactly the point. I've got a fun lifestyle, and I'm looking for the highs through anything other than trading, because it gets addicting. Any highs get. In fact, we were talking about this near the beginning, where I said I might be having a problem with that, where I'm not so responsible sometimes. Because I want to indulge in the vices too much, the vices that have turned into a lifestyle. I'd rather. I don't know how sensible this is to say online, but I'd rather the addiction comes in the form of I like driving at high speed or anything like that, than I like over leveraging and trading with too much money. I mean, there's one with a real physical risk of death, so I don't need to say this, I don't think, but obviously, don't don't drive like an idiot, stuff like that. But more importantly, to get your highs from real life, whether it is, you know, champagne dinners or I don't know, skydiving or whatever, just not through trading. And yeah, if you don't feel any big emotional response to your trades, it makes it what you don't want to do is compete with the robots, you know, with the bots by trading small time frames. But what you want to do is also think like them. So whereas the bots dominate the small time frames, humans dominate the long time frames. And if you can think like a bot on a long time frame spectrum, now you're going to beat the humans too.
Are the bots primarily on the short time frames, or are they on the midterm? Or do you think they will kind of begin to dominate the mid to long term time frames as well, and mess those?
They could do. It's just that they've been around for so long, and it hasn't happened yet.
Right.
And there have been times where they did dominate the midterm time frames, for example.
But we're talking about like half a year ago or something, when you said that things got really difficult for a certain period.
Absolutely, exactly. Yeah. There are periods where it gets harder, but I found in my experience that that's usually just in the absence of human traders. So when human traders are back in, bots just don't. And maybe that's also down to regulations, where I believe I remember reading something about how these algos that are liquidity hunters are what trigger bot patterns. They're looking for areas of high liquidity so that they can liquidate people. They're not allowed to operate on certain time frames. So it's another example of regulations helping us. I might be wrong on that, so you have to search it up if you care about it, but no, I don't think it's going to be a problem. It hasn't happened yet, and you know, at the moment it's definitely getting easier. You know, it gets easier when emotions are going all over the place, and the sharks who've been around for a long time. It very much is war. I mean, it's a zero-sum game, and I don't like the fact that it's a zero-sum game. I like to know when I'm getting wealthy, other people are getting wealthy too. But in this case, this is exactly what it is, and there's no getting around it. So it's very much what I've been calling it in my YouTube videos lately, is psychological warfare with others and with yourself. And yeah, in that sense, what you want to do is you really remove emotions from it as much as possible. So don't, you know, if you don't feel excited after a pro, and this can be tested super easy. I mean, super easy. I mean, you can know the result of this from my perspective. You can see it from my perspective after like 2 weeks of trading on a demo account with, I don't know, $100 position. If that's what you would consider small, then $100 position. If you would consider $50 small, then do that. And after 2 weeks, every time you make money, first of all, it's demo money, so it means nothing to you. You'll notice that you don't feel any highs, and you might end up trading in a much more healthy way. If not, then there's other problems to address. But in my experience, that fixes most of it. I still have issues where my trades are no good, and it does boil down to I'm over trading or something like that, whether I'm trading with too much frequency or with too much money. It's very common that it boils down to that, which is there is emotion in here somehow.
On a hypothetical note then, given the zero-sum nature of trading, with cryptos in particular, if everyone were to be as good as yourself at trading, what would trading look like? Because then it would still only be the top 2-5% that would take care of most of the money. Would it materialize itself in terms of a lot of false signals and false outbreaks and double bluffs, so to speak, that a false outbreak that turns down and then goes up, etc.? Or what do you think?
So this is I don't know if this is a real phrase. I'm going to make it now. I'm going to call it a self-defeating prophecy. I think you know what I'm talking about, because if it did get that hard, and first of all, it's been that hard in the past. I mean, maybe not as good as me, but I mean, I say this with this whole inflated ego thing, but the market's been harder for me to navigate at times where I was just straight up losing too. But first of all, we've seen that. So we've seen what a very difficult market looks like. It was... I don't know, maybe even this year. I mean, it's when there's no new people in the game, and so it's just the sharks who've been around competing for each other's market share.
Kind of like online poker is today.
Yeah, exactly. But then the other thing, the reason I think it's self-defeating is because it can never be what if all the traders are as good as me. And first of all, I don't like that whole thing because it makes me sound like the king. On a serious
You're the
note,
king.
right? Well, yeah, sure, but on a serious note, I don't like to run with that because, by the way, I mean, just so we're clear, in case some viewers don't know that, there is a load of traders that are way better than me. You can just look on the BitMEX leaderboard and you'll be blown away by the results. And I'm not on the leaderboard, by the way. I'm not even like probably top 1,000, so I'm really low in that sense. But if the traders were that good, the nature of a good trader is that you understand that you're always still a student of the market, and remembering that is what allowed me to resurface my head above very shaky waters, where for some time I was drowning and the market became really hard to trade, and I had to remind myself, look, I still need to learn. There's still learning to do. There's still learning I've been doing in this market right now, yesterday. And I think if you learn, the market's always evolving.
Absolutely. My point is rather that if the markets or the traders or the market participants become extremely sophisticated, I mean, I'm talking about an average level of a 200 IQ equivalent, as in, I personally think the market will evolve into something, from our current perspective, something completely irrational, where there's still logic to find in that seemingly chaos, but it's going to require so much more brain power to decode it.
So yeah, I mean, let's tone it down and let's say the average IQ became 150, which is still very, very high, and we can say that that's what the market was in Q1 of this year, and then. Yes, it was very difficult, and maybe the answer that you might think is going to happen is that it became very very difficult to trade, and everything just kind of came to a standstill, which is what happened. You know, at the 3K range, for example, at the end of 2018, that's exactly what happened. It just came to a standstill. No one was trading because it was too damn difficult. There were too many false breakouts and different things like that. But then new traders entered, and it kind of refreshed that cycle. And then the sharks who knew what they were doing were capitalizing off that new blood, essentially.
But
yeah,
to break in here, poker is the prime example of this, because poker started off as something quite unexploited, where good players could win money, not because they were theoretically perfect, but because they made just much fewer mistakes than the newbies. Now, and at that time, 15 years ago or so, there was a lot of new blood coming onto the markets. Now there's still new blood coming onto the market, but it's maybe 1% of what it used to be. So the sharks are kind of preying on each other. So you need to be a fucking blue whale sized shark who kill killer white sharks now in order to make a solid living from it now, because it's become so exploited. And if there is new money coming in, they're fucking guppies. They bring hardly anything to the table.
Yeah. We're in the same case now. It's just less extreme than the situation you put forward, where there are still new people entering the market. They just don't carry enough volume, and so it gets swallowed up really quickly. Which is exactly what you're describing with poker. And at the moment, it's still tradable. It's still very possible to be a student of the market, and I guess we could say the biggest shark is only a big shark, not a great white, for example. Maybe I don't know sharks, but
Hammer shark.
Anything that's bigger, yeah. I couldn't say, but yeah. I at the moment it's still tradable. Will it get to a point where it's untradeable? Maybe, but that's I don't know if it's far away or whatever, but it hasn't happened yet, and I don't want to speculate on it, because again that takes me away from what actually makes me money.
Yeah, of course.
Good to prepare for contingencies like that. I think the only way you can prepare is by not being overexposed in the market. So if it does suddenly get that badly, you have a mental stop loss and a real stop loss, where as soon as your entire portfolio loses more than 5%, 7%, 8%, you're just out of the game completely.
Yeah.
And that hopefully doesn't sound crazy to viewers. I know it would sound crazy to some of my viewers, but
no, I think the average follower of this channel is mature, both in age and in their minds. It's a very intelligent crowd, and almost all of them, I would say, take trading very seriously. So I'm sure you all know about this stuff already.
Yeah, and I've said it quite a bit on my channel, and I don't tend to get a whole lot of reactions. Maybe that's because the people who would react are shamed into being quiet, which is a very good thing, because we don't want any of that nonsense. But yeah, being overexposed will make any small problem really big, and having a healthy level of risk management means that, I mean, the world could end tomorrow, and you would still have only a 3% dent in your portfolio, and that's pretty good to me. So.
And it will end, so now it's the time to panic, everybody. On a final note, where will you be in 10 years? Will you still be trading, or?
That's a good one. I don't know. Part of me wants to say definitely not, because I don't know, it's time consuming, it's stressful, whatever. But every time I went like a week without trading, I started to really get an itch for it. And this is with 100. I mean, I don't leave trading for a week often. It's very rare, maybe like once a year. But I always come back to it, and I'm very good at it. It's something to keep me occupied. It doesn't take a lot of time. This is one of the beauties of trading, in my opinion. If you're trading correctly, you have a very, very open, relaxed lifestyle. It's 100% not sitting in front of the computer for hours a day and trading. I can't. I mean, unless you're a day trader, you can't do that and be successful. The way trading looks for me right now is every time I unlock my phone, which as a teenager is a million times a day, I just scroll to the left and check the price of Bitcoin, and then I scroll on Twitter and get all the cortisol in my brain, and that's it. And so it's very relaxed. It's not a huge part of my life, but it's a very easy way to make a lot of money. So definitely for a while, I need to buy a yacht, and I need to have all the other supercars that I don't have yet. So that's gonna happen, and I don't know how long that's gonna take, but that, yeah, whenever that happens, maybe it just moves into passive investments, and I don't know. I make the spaceships. I want to go into the space exploration industry at some point, which always sounds crazy, but hopefully it's gonna happen.
It's funny. This will be the final words. Jonas Nebukad, the guy I had on the last time. We were on his private jet, and I asked him, when will you get a bigger one? And he said, I'm gonna get a spaceship.
Okay.
So I think what you both have in common, I mean, given how far you both have come in life so far, you're not limited by earthly boundaries. You want to go to space.
No, absolutely. And to me, a big reason of why I want to go into space is it's also going to positively impact so much of what we do on Earth. If we a very good example is I don't know, we mine an asteroid which has an absolutely crazy amount of whatever component goes in your iPhone, titanium or something, and now all of a sudden iPhones go from $1,000 to $100 because there's just such an abundance of them. Or maybe we restrict supply like diamonds, and you know, now it's very precious, but it opens up possibilities. I don't know, maybe we research something on Mars and it cures cancer on Earth. You know, stuff like that has happened in the past on that extreme magnitude. So it's very exciting on a humanity kind of level, and then
so you want to go to Mars to cure cancer?
I'd cure anything. I don't know. It doesn't. That's what's exciting to me. We don't know what we're going to know, and but we know that we will learn amazing things. We just don't know what they are.
Here's a cure you can find. Newbies. You can find a cure for newbies to not over leverage and to invest too much of their portfolios.
So I didn't understand that.
Here's a thing you can find a cure to. Investors taking on too much leverage.
Right.
It's a joke.
Okay, I didn't understand.
This is the part when you laugh.
Okay, I'm so sorry. I didn't get it.
It's funny. It's funny. No, it's fine. I meant to say it is funny too. So you laugh too.
Yeah, I'm sure.
MacGyver gets it.
I'm just slow.
Sami, an absolute pleasure,
Thank
and
you
good
so
luck
much.
with your trading, and thank you for being a great friend, and see you soon again.
Thank you. Yeah. All right.